All right. The best investment in the world is an investment in your mind. Hello, everybody. This is Shane Chu. I want to take this opportunity to welcome you to the easy way to invest and trade in the stock market. This webinar is brought to you by Bursa Malaysia in collaboration with Affin Hwang Asset Management and Kenanga Investors Berhad and managed by LifeChamp. So very good morning to everybody. So before we proceed, just want to know if you can hear us and see our webcam and our visual. If you can hear me, see our webcam and see our slide share, please go to the chat box and click yes. All good? Excellent. Wow, so many of you, a few hundred of you are online right now together with us to learn about what is ETF. Now, today, the topic of today is ETF. Now, I'm sure that you all have seen how volatile the market is, okay, with COVID-19 grabbing the headlines every day and swaying the direction of the market. Right now, we have an increased risk, which is the trade war. I think there was a row between two biggest economies in the world, and then that affects our stock market as well. So today, we are going to learn how you can use ETF to reduce your risk, and you can do it the passive way to invest in the stock market. If you're an investor, you want to have instant diversification, you're going to check out how to use ETF to invest in the market the passive way. But if you are a trader who likes volatility in the market, you can also learn to use leverage and inverse ETF to profit in both bull as well as the bear market. Today, we are very honored to have invited two renowned issuers, ETF issuers in Malaysia from Affin Hwang and Kenanga Investors. So we have a first speaker, which is a director of ETF and Innovation Lab of Affin Hwang. And then we have also invited the CEO of Kenanga Islamic Investors Berhad to share with us leverage and inverse ETF. So make sure you stay on until the end of this webinar, because we are going to launch a quiz to check in with you if you're paying attention in this webinar. So we are giving away 3 prizes for this webinar, which is the first prize going to get a 3-day 2-night stay at a 5-star hotel in Langkawi. The second place will get a Deutsche Gusto coffee machine, and the third place will get a 2-packs dinner set meal at Atmosphere 360 degree. Now, if the Atmosphere 360 degree is not available on the date you want, then of course we can also replace it with another equivalent value set meal at another place. All right, and on top of these quiz prizes for our winners who understand ETF well, we also have lucky draw. The price is about 10. We have a 10 units of touch and go e-wallet top up of 50 ringgit. So if you are lucky, okay, and for this, I will explain to you how you can stand in the running of this lucky draw for the 10 times touch and go e-wallet top up worth 50 ringgit, sponsored by Bursa Malaysia. Now, without further ado, let me go into the content today. From 10 to about 11 o'clock, this will be the session for ETF by Affin Hwang. From 11 o'clock to 12 p.m., this will be the session on leverage and inverse ETF by Kenanga Investors Berhad. And then from 12:30 to from 12 to 12:30, there will be our lucky draw session. And some announcement for you. We also have a big announcement for the ETF rebate program that will be announced towards the end of this webinar. So make sure you stay tuned until the end of the session so that you know how you can be in the running of our lucky draw and win our quizzes, prizes, as well as know how to get your certificate and be in the know of our ETF rebate program. So before we move on further, here is the disclaimer. Okay, whatever we share on this webinar is only for educational purpose. In no way that we give any buy or sell signal to any ETF or any stock. So in the event that you want to invest or trade any products that we mentioned in this webinar, it is only for you have to be 100% responsible for your investment decisions. All right, so let's go. Now, before we go to content, let me introduce our first speaker today. I'm going to interview her later on the ETF. I'm going to grill her so that she can review to you everything you need to know about ETF. Now, she is our first guest today. She is the Director of ETF and Innovation Lab of Affin Hwang Asset Management. She is responsible for developing strategies and products for the ETF's business within Affin Hwang Asset Management. Prior to assuming this role, she was heading the product development team for unit trust funds. She has over 13 years of experience specializing in wealth management products. Now, prior to Affin Hwang, she has worked with Alliance Bank and Standard Chartered Bank. All right. Hello, Li Chu. Good morning, Li Chu. Are you on the line?
Hi, good morning, Shane.
All right, excellent. So I'm going to stop sharing my slide and I'm going to ask you questions on ETF. Are you ready?
Yes.
Awesome. Okay, so we are very glad to have you on board with us. Now, firstly, let's talk about what are actually ETFs.
Okay. I hope you guys can see my slide.
Yes, perfect.
Okay, good. Thank you very much, Shane. Indeed, it's a sunny Saturday morning. I think this is one of the first Saturday webinar that I've done, especially in the morning. A long time I never do webinar in the morning. So if I look a bit like still sleepy, pardon the face, yeah. So okay, let us talk about ETF today. Interestingly, we have just listed 2 of our new ETF last week, and we've been doing some education roadshow. So I don't know if this is your first time seeing me. If it is, just say hello. Now, ETFs, to put it very simply, it is actually a hybrid product between unit trust and shares. So today, most of you here, if you have invested in the stock market on Bursa Malaysia, you are a stock trader, right? And at the same time, I'm sure some of you here are unit trust investors. So you have been investing in public mutual fund, you have been investing in Affin Hwang's unit trust fund, or even Kenanga's unit trust fund, right? So ETF is a very unique product that sits in between shares as well as unit trust. So there are a lot of benefit of being in the middle or in between these 2 products. So the good thing about ETF is that it inherits the diversification of a unit trust fund. So which means that ETF is not a single share, right? So it is a basket of share. It is a basket or a portfolio of, it could be bonds, it could be commodities as well. So because it is ultimately a fund, you technically have to, the way it is being structured is exactly like a fund, and then you have to pay management fee. But of course, when it comes to investing or the way to invest into ETF, it is different from unit trust fund, because unit trust fund, you will need to meet a unit trust agent and then you need to sign a form, right? But for the behavior or the trading of ETF, it works exactly like a share, which means that you can do intraday trading if assuming the ETF actually moves significant enough for you to take profit. And then of course, in terms of settlement, it's T+2, and you trade via a brokerage account. Okay, so many people have asked, in fact, we receive a lot of query from investors directly to our website, to our email, and even WhatsApp, and asking us, hey, how do I invest into an ETF? It is very simple. Today, if you already have a stock brokerage account or a CDS account with any brokers in Malaysia, you are good to go. You can just invest into ETF immediately. So of course, if you invest into shares, volatility is very high. It moves up and down, very quickly and at a higher rate, right? So which means that because ETF is a basket of portfolio, it may not be as exciting as shares. So the movement in terms of price could be a bit lower. So what we like to say is that ETFs are index trackers, okay? Typically, if you compare ETFs with unit trust fund, right? Today, if you take a look at the performance chart of a unit trust fund as well as an ETF, you will notice the major difference. For unit trust fund, you always see an outperformance, right? You will always see, the benchmark line is like this, and then the unit trust fund performance is like that. Then that shows you that this is a good unit trust fund because the fund manager actually helps you pick shares that outperform the benchmark. But for ETFs, we call them index tracker because the objective of the fund is not to give you outperformance, but it is to give you the market performance, or in other words, it is to track a particular index. Okay, let's give you an example. Okay, today I'm sure all of you here are very, very familiar what the FBM-KLCI is. If you don't know what FBM-KLCI is, and if you're investing into the stock market, then I'm a little bit worried, because if you don't even know the benchmark in the first place, then it's quite worrying to me. Okay, now for the FBM-KLCI, we all know that it consists of the largest 30 companies in Malaysia in terms of their market capitalization. So if there is, in fact, there is actually one, the KLCI ETF. What the fund manager of this KLCI ETF do is really to mirror the performance and the constituents of the index. So if FBM KLCI has got shares like Public Bank, Kenanga, Maybank, CIMB, Axiata, Petronas, of course this weightage could be a bit older now, the ones that dominate the top are the glove companies, right? So when you have these constituents or underlying within the index, the fund manager will just mirror, okay? But that does not mean that, mirroring an index, some may think that, looks like, it's better off investing into a unit trust fund because it gives me outperformance. But there are, in the US especially, ETFs can be very, very popular because number one, the fund managers are unable to outperform the benchmark. But of course, in Malaysia, the cases could be a little bit different, but there are other ETFs later on that I will share that you can look into that could give you better performance. Okay, now very, very briefly, I just want to do a comparison between unit trust versus ETF. So when you buy a unit trust fund, you buy and sell through a unit trust agent. And we know that most of the time when you sign the form, you will only say, I'm investing 1,000 into a unit trust fund. But you don't know what the price or the NAV is, because the way the industry works is that we take forward pricing. Forward pricing means today, at the end of the day, I will value the value of my portfolio of all the shares that I hold, and I will work out a number which is called the net asset value, and investors will be buying at that price. And of course, the investment has to be paid upfront, and sometimes redemption proceeds, can be delayed a little because the fund manager do have the flexibility to pay you within 10 days from your redemption. And of course, we do know that, investing into unit trust fund comes with a slightly higher sales charge and management fee. When it comes to ETF, we buy and sell through a local broker. So like I said earlier on, any broker, Maybank, CIMB, Rakuten, anyone, any brokers in Malaysia, as long as you have a brokerage account or CDS account, you can already trade ETF. And the good thing about it is the price is known, because when you buy and sell, because it behaves exactly like a share, right? So you will see the buy price and the sell price, and you know exactly how much profit or losses that you are locking in, the fact that you know the price, okay? And investment amount is all settled just like shares. So within T+2, you will receive the delivery of shares for your purchase, and you will receive your redemption proceeds or sale proceeds T+2, okay? Now, when it comes to the cost that is involved when trading ETFs, it would be the brokerage fee, clearing fee, and stamp duty. Exactly the same like shares, okay? And management fees are generally lower as compared to active unit trust fund. I mean, it is very clear because unit trust fund, there's a lot of work that the fund manager needs to do. Whereas for ETF, the fund manager doesn't really have to do a lot because they are just merely tracking an index. Okay, so this is just very quickly how you can invest. So just open a brokerage account. As long as you have a brokerage account, you can already invest into the ETF.
All right, cool. So we know that ETF is essentially a hybrid between a share and a unit trust fund. And there's a brilliant comparison between unit trust and ETF. So Li Chun, let me ask you the next question, which is what are the benefits, or why should we consider to invest in ETF?
Yep. Good question. Many people ask the benefits of investing in ETF. First of all, we will talk about cost, right? ETFs, because you are investing into a basket of shares, if you compare it relative to unit trust fund, the cost is lower because the upfront fee that you pay is lower in terms of between the brokerage and the sales charge. And when it comes to transaction costs as well as the management fee, it is also lower generally compared to unit trust. The second thing is it gives you access to asset classes that you may not have the reach in terms of when it comes to the stock market. Let me give you an example. Today, if you want to buy gold, okay, gold prices have almost hit the all-time high is at $1,900 per ounce. And today, if you want to get access to gold, what can you do? You can buy physical gold, of course, but is that a cost-efficient way of getting exposure to gold? My answer is it may not be unless you hold the physical gold because of security reason. Other than security reason, if you're just trying to get exposure and trying to capture the price performance of gold, then there are other ways which you can look at it. So gold ETF, for instance, is a good way for you to get access to gold. And it kind of gives you the access that you need. And then the second thing about access is when we talk about foreign investments or foreign market, today, as a Malaysian investor, we want to try and diversify our investments across the different geographical region, across different asset classes. And when we talk about the geographical region, for instance, you want to buy into, the US market, you want to buy into the China market. It's very cumbersome, to go and open an account with, a foreign broker, or you can do it through your local broker. But again, back to the cost, it could be costly. So ETFs gives you access to areas or to opportunity to areas and asset classes that you typically can't do it easily. Okay, now third of all, in terms of transparency, ETFs are perfectly transparent. So today, if you look at how unit trust is being managed, the fund manager will definitely not disclose the entire portfolio holding to investors because that is their secret recipe, right? Just like no chef in the world will tell you exactly how to cook this particular dish. Same goes to unit trust. They will not leak out. They will not tell you the entire stocks in their portfolio. So they probably just give you the top 10. But ETFs are transparent. So at all times, every day, we disclose all the stocks in the portfolio to investors via an announcement on Bursa Malaysia, as well as it will be available on the issuer's website. Last but not least, when it comes to liquidity, because the price is known, it is generally a liquid instrument. And I believe we will touch about liquidity in a short while.
Okay, great. Thank you for explaining why we should invest in ETF. Now, could you tell us what are the types of ETF that are available on the Bursa Malaysia?
Okay, I think many of us here may not know that as of today, Bursa has close to 20 ETFs on the board already listed on Bursa, right? So today, if you take a look at the types of ETF available on Bursa, it ranges. We have domestic Malaysian equities. So there are actually 4 ETFs of different types that tracks the local market. So which means that all these 4 ETFs only buy into a basket or holds a portfolio of Malaysian equities. Okay, and of course, they are different strategies. Give you for instance, the FBM KLCI ETF that just tracks the top 30 largest company, and then you have the My ETF MSCI Malaysia Islamic Dividend. It tracks a basket of Islamic shares, Sharia compliant shares that gives you dividend. And recently, Affin Hwang Asset Management listed TradePlus DWA Malaysia Momentum Tracker. This is a smart beta ETF that gives you exposure to 20 high momentum stocks. Okay. Now, there is also a bond ETF in Malaysia. In fact, this is the largest in terms of AUM, called the ABF Malaysia Bond Index. And then, of course, we have gold ETF by TradePlus. It's a commodity. Then we also have a REITs ETF. So today, some of you, who likes to invest into REITs because you like the dividend, you like to collect dividends, you can, other than buying into Malaysian REITs, you can get exposure to Asia X Japan REITs on Bursa Malaysia via the REITs ETF. So, instead of you going to Singapore, going to Hong Kong, open a trading account or brokerage account to buy Singapore REITs and Hong Kong REITs, you just buy this ETF, you get those exposure. Okay. In terms of foreign underlying, we have also about 5 ETFs that tracks foreign markets. So you have ASEAN, you have China, you have Southeast Asia, as well as the US exposure. Many of us don't know about this, but all these products exist. And last but not least, end of last year, there is this new strategy which we have brought to the market, which Encik Zul later on would bring all of us through, would be the leverage and inverse strategies, or leverage and inverse ETF. So this ETF gives you 2 times exposure and one time net minus 1 time exposure, i.e. shorting the market. And there are currently 6 of these ETFs in Malaysia.
Okay, well, it seems like the TradePlus has, there are a lot of TradePlus ETF on the list of Bursa Malaysia. So if you are bullish on gold, I think you can also consider some of the commodity ETFs, such as the gold ETF listed on Bursa, because like what Lichu said, it's not, you may not want to store physical gold at home, so buying gold ETF can give you exposure to go to the gold market, right? So now, Lichu, just now you talked about the benefits of investing in ETF. Could you also briefly walk us through what are the risks that we need to know when it comes to investing in ETF?
Sure. But we talk about investment, clearly there would be risk, right? We can't run away from this. If I just talk about the benefits of ETF and not talk about the risk, I think the Securities Commission or Bursa Malaysia might come after me, right? So if we try to understand the risk of investing into ETF, I would highlight a few. Of course, the recommendation is always ETFs have prospectus behind the fund, right? So it is good that investor, take your time to read through the prospectus, because the full risk disclosure is in that thick document. Okay, don't waste our effort in trying to type out all this, disclose all this risk to you. But it's good that as an investor, you understand fully what risk you are taking when investing into ETF. So first of all, very importantly, we know that because this is a basket of shares or a portfolio, there is something which we call net asset value. So net asset value simply means the fair value of that particular fund or ETF. Okay, so today, because this ETF is listed on Bursa Malaysia, we have market makers, that we appoint to help provide liquidity in the market, which means that they will consistently put up the bid and ask price. And there could be also times where these guys could be absent in the market. So when they are absent in the market, the market makers, then which means this ETF now becomes is being traded purely based on supply and demand. So whenever things goes on supply and demand, it could be trading either at a premium, at a price higher than the NAV of the fund, or it could be trading at a discount, which means it is cheaper to buy as compared to the NAV. That's definitely one key risk that investors need to note. Secondly, in terms of market risk, just like when you invest in shares, the underlying investments that we invest in can go up or down. So you have to take market risk, okay? And then the third thing that we want to highlight is that today, even though the market makers are there, liquidity is there, in the event, the issuer, which is us, have to suspend the creation and redemption of units. Okay, so later on, I will go through this part a little bit in detail when I talk about liquidity. But generally, if the fund manager, which is the issuer, suspends any creation or redemption of the units, which means market maker cannot come to me to create more units, then there would also be a scenario where the price the NAV or the trading price on Bursa could be trading at a premium or discount. And of course, tracking error risk, as much as we try to mirror the performance of the particular index, there is no guarantee that we could achieve that objective, at all times. So do take a note at, review the performance of the ETFs as compared to the performance of its benchmark. And last but not least, liquidity risk. So even though there is a market maker which we appoint in place, there could be times where, due to whatever reason, it could be a system problem, it could be, that they are unable to take a higher risk, they could be absent from the market, causing liquidity risk. But all these risks are, quite, in a way, manageable, I would say, because the issuer ensures as much as we can to mitigate the risk that which I've just explained.
All right. So now, Li Chu, just now you mentioned about liquidity risk, right? And I think there, as I scroll through the chat room, and there have been questions. There were already questions on the volume and liquidity. So I think people are very interested to know, because from the chart patterns, you see that some ETF, maybe the chart pattern is not so nice, and then volume also thinly traded. So could you tell us, like, liquidity? Is there really liquidity in the market?
Yep. Okay. Now, let me walk you through this diagram. Yeah. So today, assuming as an investor, if you're already invested in the stock, in the share market, number one, for share market, there is no market maker that exists, right? The price of Maybank, for example, fluctuates purely depending on the buyer and seller. If you have more seller than buyer, it drives the price of the shares down. If you have more buyers, higher demand as compared to supply, it drives prices up. But for ETFs, the price of the ETF generally doesn't move that much in accordance to supply and demand, but rather driven primarily by the net asset value or the fair value of the particular ETF. Okay, because you see, if the ETF today has got, let's say for example, the ETF only has one share. Okay, one share, which is Maybank shares. So let's say if the ETF holds only Maybank shares, and you can also buy Maybank shares yourself. So if the price of this ETF that only has Maybank is at $10, and if you have you can buy Maybank shares in the market at just $8, there is an opportunity for you to arbitrage, right? Because it's the same thing, and you can buy one and sell the other. Okay, so as a result of it, the price of the ETF will always come back to its fair value. Okay, so now in that case, the fact that it is not driven by supply and demand, and this is managed with the presence of market maker. Okay, because if let's say for ETF, because the volume is rather low, I'm not gonna lie and say that wow, it's so exciting to trade ETF. The volume is as great as the penny stocks and even some of those momentum counters, right? The volume is fairly low, but it does not indicate that there's no liquidity, because the market makers will always step in to act as both the buyer as well as the seller. So which is why their job here is really just to every day at all times key in a bid price for investors who wants to sell, keys in an offer price for investors who wants to buy the ETF. Of course, as an investor, you can come in to narrow the spreads if you like, because that may not be the price that you are looking at, but you can queue at your desired price. But in the event that the market or the portfolio of shares doesn't really, move towards that price, then the transaction is not done. Okay. And how market makers can achieve this is because, bear in mind, ETFs are unit trust funds as well, right? Which means that the ETF issuer can increase more units when there is a lot of demand. Let's say there are not so many people wanting to buy our ETF, but the market makers only have 100,000 shares, for instance. And assuming if there are 1 million shares that the buyers wants to buy. So what the market makers can do is they can come to us as an issuer to give them more units. Okay, so what we'll do is we will then issue the additional, say, 1 million shares to the market maker. So now market makers can sell to the buyers. And in this case, some investors may worry, hey, then, my shares are all diluted because you keep issuing more shares. But in this case, there is no dilution. You don't have to worry about it, because the ETF issuer, the minute more units are being circulated, the minute more units are being issued out, we will back it up with the underlying shares. So if the index has got 20 shares, we will make sure with the 1 million units we issued, we buy the equivalent amount of shares of the index. Okay, so this ensures that there is constant liquidity, because the liquidity on the issuer side is most of the time hidden from retail investors. So if you just purely look at the volume, buy and sell, you will notice that actually it's not liquid. But in actual fact, you don't have to worry about that. Okay, so the major role of this market maker is really to put up bid and ask prices for you to buy and sell, and is to ensure that they are traded at a current fair value. Now, this is an example that I want to show you. Now, today, if you take a look at this, you will see that the volume here, right, of these ETFs, wow, a lot of zero, right? Naturally, as an investor, if you are a stock trader, you will say, well, this counter cannot buy one, because I can get in, I cannot get out. But many people don't realize that there is constantly a bid ask being put up, right? If you take a look at all the ETFs, there is a bid and there is an ask price. And some of it, if you notice, are in big quantity, like 30,000, 100,000. And take, for instance, the China ETF, you have 100,000 on the bid and 100,000 on ask. So these are all put up by our market makers. They are ready to trade with you. Okay? And you also will notice that some of these prices will move throughout the day, because the market maker is constantly calculating what is the fair value of this ETF. And they will be constantly changing the bid and ask price of this ETF. Okay? So like in this case, the gold ETF, you see 250 and 251. So the one on the ask 251 has got a higher volume, because it is also the market maker's quotation. And on the other side, you only see 600 being put up on the bid. So very likely our market makers are queuing slightly below 250, and these are retailers who is coming in to narrow the spread. So today I can tell you, many investors complain to me, hey, why your market maker spread so lousy, 1-2% away. But you must understand that, okay, number one, these guys are there to provide liquidity for you. They take on market risk. So they need to be able to make money when the market is vibrant. So if everybody, liquidity is all about chicken and egg, right? It's like you want to see volume. But if nobody is stepping in to create or generate those volume, this volume come from where? Drop from the sky? It doesn't, right? So this is also the reason why we've been educating investors. We've done numerous roadshows to explain liquidity to investors. Personally, I've already invested in a lot of these ETFs, and I have no issue trying to get in to buy and trying to get out, i.e. to sell.
All right, so that is a fabulous explanation on the myth of no liquidity. Actually, it's not true, because it doesn't come from supply and demand. It's all come from market makers. So there are plenty of liquidity in the market for ETF. Just let people misunderstand there's no liquidity, because surely no volume. All right. So next questions I want to ask is, now how do we know if the ETF price is fairly valued?
Okay. Now, Bursa has done a really great job. They have put up in this Bursa Marketplace website. So I think you can see the website at the bottom. If you go to Bursa Marketplace website, look for the list of ETFs in Malaysia. And when you open this listing, you will see all the ETFs listed, and you refer to this column called IOPV. So this IOPV is calculated on a real-time basis, but I think it is probably 15 minutes delay. So every 15 minutes is being refreshed. So this gives you a good indication of where the fair value of this ETF is at, and then you can compare this with the price just now right here quoted by the markets to decide if you are buying at a fair value or not. So give you an example, this TradePlus Sharia Gold Tracker, the IOPV is at 2496. So if you go here, it is at 250 and 251. So it's not too far away from the IOPV, then it is all right. So you have to make sure that before you jump in to buy any ETFs, if possible, do take a look at the fair value, because you don't want to end up buying at a premium. Okay, you want to end up buying either at a discount or at or close to the fair value. So if it's a slight premium, I would say, no issue with that. But don't buy like 2% higher or even than the IOPV. Okay.
But there's, like in this example, there are 3 ETF that do not have the IOPV. Is there a reason?
Yes. So the first 2 ETF, we are working with Bursa right now, because these 2 ETF on top are new ETFs, which was just listed. So we currently publish it on our website. The momentum one, we publish it on our website. And then the Asia X Japan REITs, I think it should be up sometime next week already. So investors will be able to take a look at IOPV from next week onwards.
It's already up.
Oh, it's already up. Okay,
Yeah.
Thanks.
Oh, it's already updated. Okay.
This is taken a few days back, I think.
Okay, thank you, Bursa, for explaining it. So the next question I want to ask Li Chu is that Li Chu, so when it comes to choosing an ETF, what are the things that we need to look out for?
Okay. Well, whenever we talk about ETF, okay, today, if you have heard of ETFs in the US market, I think a lot of you will tell me, wow, US ETF is very cheap. The total expense ratio of the fund, of the ETF, is generally below 0.5%. Okay. Some could be, like S&P 500 is in, the range of maybe 0.3, 0.4, sorry, it could be 0.0 something, 0.1% all the way to maybe about 0.3%. So when you compare that with the Malaysian market, the TER, or total expense ratio, for Malaysian ETFs are generally on the high side, is at around 1% or below. Different ETFs would have different cost. Okay, so that's something that you should take into account when assessing the ETF to select. Second thing is the tracking error or tracking difference. How closely does the ETF tracks or mirrors the performance of the index? Okay, just now in the very beginning, I said unit trust fund will deviate from the benchmark. It will always tell you that they outperform. But should an ETF behave or have that kind of attribute, then that is actually not a good ETF, because the objective of the ETF is to track the index. The minute it doesn't track the index, you are not buying an ETF already. Because the fact that investors wants to invest in ETF is because they want to invest into the index, which they cannot, which there is no other way for them to invest directly into the index. So third point that I want to bring up, of course, is the index strategy. Okay, you have to first, because buying ETF is equivalent to you buying the index. So which means that investors have to spend a little bit more time to try to understand how is this index being constructed, what stocks get included into the index. So you need to do a bit of homework, right? You know, read and understand or attend a free webinar sponsored by Bursa to understand how all this thing works. Okay, whether is it market cap weighted, is it smart beta, or is it a leverage and inverse ETF, for example. So other than these 3 main things that we always talk about, when investors want to choose an ETF, there are many things that are often being overlooked by investors. First of all is the total transaction cost. Okay, today many investors in Malaysia complain to me and say that, wow, your TER if it's at 1%, it is extremely high. If I go to the US market, I buy ETFs, it's so cheap. I pay only 20 basis point, which is 0.2%. Okay, 0.2% compared to 1%, right? Then you tell me, wow, it's so expensive. But have you ever considered your brokerage costs when you trade the US ETF? Have you ever considered your currency spread? Whenever you need to invest in the US market, what do you have to do? You need to convert your ringgit Malaysia to a foreign currency. It could be US dollar or Hong Kong dollar, Sing dollar, whatever. And whenever you convert this currency to via a bank, you have to take note that the bid and ask of this currency spread is very wide. It could go up to 2-3%. And just the fact that these are all hidden, right? Things that you can't see like upfront, you pretend that it doesn't exist. So if you add all these little costs up, it could work out to plus minus 1%. So of course, what the issuers in Malaysia are trying to do is to offer investors a convenience to trade foreign markets as well as local markets on Bursa Malaysia, so you don't have to scramble around trying to convert your ringgit to foreign currency, open accounts offshore, and transferring money, etc. So everything can be done on Bursa Malaysia.
All right. Yeah. Now there's a reason for us to invest in foreign equities ETF listed on Bursa Malaysia. Now, so how do we compare ETFs in Malaysia?
Okay, so in case some of you don't trust the issuer's website, if you think that the issuer's just trying to be very biased on our own ETF, there are independent websites like Morningstar, for instance, that you can log on, and that they have that this website is actually pretty good by Morningstar, where you can compare unit trust funds, you can compare ETF fund performance, right? So if you take a look at this, if I just select the ETF, you will notice that you can sort this return either by year-to-date return, 1 year, or 3 years. Okay, so if you this is I can't remember when the snapshot or the date of this particular return is at so you can go to the Morningstar website yourself, go and do your research there. If you click on each and every one of these ETF, it will give you a snapshot overview of what these ETFs are, etc. And if you want to do a bit of homework, a bit of research in terms of, whether you should buy an ETF or should you buy a unit trust fund, for instance, right? You want to buy China, okay? Let's say you want to get exposure to China. You can compare the two China ETF that exist on Bursa Malaysia, which is our TradePlus S&P New China Tracker, versus the principal FTSE China 50 ETF. And then you can go to the fund unit trust fund universe to filter out all the China-related unit trust funds, and then you can make your own comparison in terms of performance, which one has historically performed better. And if you think that you want to blend it, you can also go ahead and blend active as well as passive.
All right, excellent. So in fact, I also use Morningstar very often myself.
Yeah.
So it's an excellent platform. Now, so literally, I've talked at length about what are ETFs, what are benefits and risks investing in ETF. Could you also share with us what are some strategies we can use when it comes to investing in ETF?
Okay, that's good. I'll give you maybe two examples of how you can use ETF. Today, I don't know how many of you here have the time to open your trading account, monitor your share investment every day, every other hour, okay? Personally, I don't have that time. So I prefer to invest passively. So what I mean by investing passively is I typically will just pick ETFs or unit trust funds as my vehicle to get exposure. So I rarely do my own, stock picking, because, stocks can be so volatile. Yeah. If you only have time to open your trading account once a day, some people don't even have time to open once a day. Yeah. If you only have time to open it once a day, sometimes you get a shock. Wow, if you make money, of course, you'll be happy, right? 10-20% up in a single day. But it could also mean that shares can go down 10-20% or even 30% in a single day. So if you want to regularize your heartbeat a little bit, not to get heart attack every now and then investing into a basket of ETF or unit trust could be an excellent approach for you. Those who have a weaker heart, right? as you grow older, so your heart cannot take such excitement. Yeah. So if you can't, don't have time and don't even have the expertise to pick the stocks that you want to buy, then buying ETFs and funds are the best way. So what you can do is you can always decide on the asset allocation between the various asset classes and strategy. For instance, you can build a global portfolio if you like. You can you can allocate 10% into US, 10% into China, maybe 50% in Malaysia, because that's our home base. So it's entirely up to you what sort of access you want to create for yourself. Okay. And then from there, you go and pick and choose what are the ETFs that are good, that can help you obtain this exposure. Okay, some of you may also say that I can do my own Malaysian investment because we live in Malaysia and we know basically what stocks will do well, what sector will do well, etc. So for those investors who are very savvy, okay, for the Malaysian portfolio, you can decide to do your own stock picking. So no need to buy any of the Malaysian or domestic ETF. Just focus on your own stock picking strategy. If it gives you good return, why not? And then you will need to also diversify to foreign exposure. So for your exposure in the foreign exposure, I would suggest that instead of buying, one Alibaba shares or one Amazon share or even Tesla shares, which cost you 1,000 US dollar, might as well buy into ETFs, which is give you a portfolio of shares and at a very, very affordable entry price, because the ETFs are priced at in ringgit Malaysia and at definitely lower than 1,000 US dollar price.
Yeah. Okay. Now, so as an issuer yourself, Lichu, what are some products offered an ETF issued by Affin Hwang?
Yeah, very, very briefly, I will just let all of you know that Affin Hwang today, all the ETFs are branded as TradePlus. So if you try and key in Affin Hwang ETF, you probably can't find much. But if you look for TradePlus, you'll be able to find all the ETFs that we offer. Today, we manage 8 ETFs in Malaysia. We have 4 leverage and inverse ETFs. We have a gold ETF. We have thematic, which is your equity thematic, which is a new China. And we have recently listed the DWA Malaysia Momentum Tracker, as well as the MSCI Asia ex Japan REITs Tracker. So, if you want to build a diversified portfolio, we have REITs, we have gold, we have China, we have Malaysia. Okay. And if you want some excitement, go check out our FANG leverage and inverse ETF. Yeah.
Okay.
So, before we take questions, Shane, just to let you know that we can be reachable via various communication methods. So if you want to PM us on Facebook or Insta, follow us on our Telegram channel. We have a Telegram channel, and also WhatsApp. Okay.
Oh, so that's for Affin Hwang Asset Management.
That's right. Yes.
All right. So I think I'm done with my questions today. So let me open the floor for the participants to ask Lichu questions. So if you have any questions that you want to ask our guest speaker today, Lichu, please go to the Q&A box to type in your questions. Please type your question in full sentences so that our speaker can understand it and answer it accordingly. Please don't type in the chat box. There's a difference between chat box and Q&A box. Because chat box, the messages are just too many, so we may not be able to find your burning question. So if you want to ask our speaker a question, please type in the Q&A box. If you are streaming in from YouTube, you can leave your questions on the YouTube comment. We will be able to pick some questions to ask our speaker. Lichu, you can take it over.
Yep. Okay. I am just seeing some of the questions. Yeah. Some of it could potentially be a bit longer. So in the interest of time, I will just pick those that we could answer quickly. Yeah. Now, I think I want to answer this one that Karen says, is it recommended to invest in ETF for long term or short term? So just now I did mention that most of the ETFs are recommended for long term investment. Okay, but there are also in ETFs like leverage and inverse ETF, which Anchezo will talk about later, that would be more suitable for short-term trading as well as holding it medium to long-term, depending on your view. But generally, leverage and inverse ETFs are designed for shorter-term trading. So in general, it is for long term. The spread between bid and ask price is too wide. I think just now I did mention already that yes, it is in fact wide, but if let's say taking into account this spread factor plus all the other costs, and if still it is not so what I'm trying to say here is that you can't compare it with shares investment. Okay, shares investment is also because there are so much awareness about the product. People come in to narrow the spread. So ETFs will get there one day, but it takes time. Okay, so if you are investing for the long term, to be very honest, this 1% spread sometimes, if you spread it out across this number of years that you're holding, it is not that bad. And of course, we also hope that one day many more Malaysian investors are aware of ETF. Then naturally, you don't have to worry about the having to rely on the market makers to provide liquidity. Buyers and sellers in the markets will come in to narrow the spread naturally. So we hope that Malaysians don't use that as an excuse not to invest into ETF, because like I said, this volume is really a chicken and egg thing. If nobody is going to give a chance to the ETF market in Malaysia, then it will not go anywhere. We can wait 10 years, 20 years, 30 years. Liquidity will not come. Volume will not just drop from the sky. Okay. Now, how do we know the charges being charged to our ETFs NAV daily? Will there be an online statement issued to investors? Okay, ETF and unit trust, they work the same way. So on a semi-annual basis and on a yearly basis, there is an annual report which we issue out to investors. Okay, so we will not list down and say that, okay, let's say, for example, Li Chu invests 1,000 units into this ETF. Therefore, I am paying 50 cents of management fee. 50 cents is deducted from my account. We don't give you such detailed statement, but in fact, they are all put together at the fund level. Okay, so which means that based on the assets of the fund at a pool level, let's say we have 10 million, and out of this 10 million, maybe $100 is deducted from the 10 million pool as liability as cost. So it all boils down to then, after deducting all these expenses, we get a NAV. Then this net asset value will be divided by the total units in circulation to give you your NAV. In other words, all these are already priced in. It's in the in the annual report which we issue to you on semi-annual as well as annual basis. Okay. Can I use my EPF fund to invest on ETF like unit trust? You can't, unfortunately, at the moment, but we are trying to talk to EPF to allow them to basically allow ETF investments using your EPF money. Okay. Any ETF tracking S&P 500 and NASDAQ listed in Malaysia stock market? If you take a look at the My ETF, Dow Jones, Dow Jones Titans is what is it called already? Let me see. Let me go back to my slide. It's not by us, it's by My ETF. So it's the My ETF Dow Jones US Titans 50. Okay, so this is a Sharia compliant version of the S&P 500, but the only downside to this is you can only trade it in US dollar, even though it is in Malaysia. So which means that your broker needs to be able to clear US dollar. So other than this ETF, there isn't really a US tracking ETF, except for our leverage, Affin Hwang's FANG leverage and Inverse ETF. So this one, you can also take a look at it, but bear in mind the daily leverage is a 2 times leverage. So in the event the index goes down, one time you will get hit 2 times, which I think Zoe will explain the feature of it later on. But you can go to our website, tradeplus.com.my, and go and read more about this ETF to see if it's suitable to you. Okay, can you give an example of savings in using local ETF versus foreign brokers? Okay, I was told that depending on which broker you use, say for example, you use a local broker like let's say UOB Kay Hian, if I'm not wrong, when you buy in the US market, which they allow, you need to pay minimum brokerage of 40 US dollar or something like that, if I'm not wrong. Yeah, I'm not exactly too sure, but there is always a minimum. On top of that, you need to pay your local broker another fee. Okay. And in that case, when you add these two up, actually, you are definitely paying more already as compared to, just buying the local ETF in Malaysia, because the local ETF in Malaysia, you only need to pay, the local brokerage, which is typically quite low. I think a minimum of, depending on who you go to, it ranges from $7 minimum to $10 minimum, and also, 0.1, some like M plus, they even have cash upfront, 0.08%, etc. So I think in terms of savings, if you ask me, maybe depending on your investment amount also, it varies. If you have a huge investment amount, then it's good. So it really depends, I would say. There's no straight answer to that. What is smart beta? Please head over to Facebook, our Facebook, TradePlus by Affin Hwang Asset Management. We have a webinar that talks about smart beta ETFs.
Okay.
Yeah.
So let me ask you some questions from YouTube. On YouTube, I think there have been 2 questions on dividend. Could you tell us how does dividend work in ETF?
Okay. Now, some ETFs will give you dividend, some don't give you dividend. The reason for that is it really depends on the portfolio of shares that the issuers or the fund holds. For example, the MSCI Asia X Japan REITs tracker that we just listed, that is a REITs ETF where all our REITs, we will receive dividend as and when they declare it. So we will accumulate those dividends and pay out to investors on a quarterly basis. But there are ETFs like, for example, our new China tracker ETF. It is a growth story. Okay, we invest into shares like Alibaba, Baidu, JD.com, Pinduoduo, etc. And all these companies are your growth companies, and they don't typically pay very high dividend. That is also another reason why we will not pay out dividend for some of these ETF. But don't worry, because all these dividends, as and when the fund or the ETF receives those income, it will be put into the income portion of our books, and then it will be reflected in the NAV or the price of the ETF.
All right. So I guess that's all for Li Chu sessions. Thank you so much, Li Chu, for your sharing on ETF. So today we learned that the biggest reason whenever I ask investors, do you invest in ETF, they say no, because no volume. Okay, so this no volume should be well addressed, because there have been plenty of liquidity in the market provided by the market makers. So don't have to worry about ETF having no volume, because the fact is liquidity is everywhere. All right. So thank you so much, Li Chu, for wonderful sharing on the ETF. Thank you so much, and thank you all participants for tuning in for our webinar. Now, we want to proceed to invite our next speaker. So, if you allow me, Li Chu, I will want to you have to share your slide. Okay. Okay, cool. Let me share my screen. Okay, we want to invite the next guest speaker online, and in fact, he has already turned on his webcam. He's already here. Now, it is is a rare occasion that we will manage to invite a CEO to come to our webinar to share with you about their products. So today we are very honored and excited to have invited a guest speaker to come on our webinar. So he's none other than Mr. Zulkifli binti Izzat. So Mr. Zul joined Kenanga Islamic Investors Berhad in January 2019 and was appointed as CEO in February 2019. Now, subsequently, in March 2019, Zulkifli was appointed as an Executive Director of KIIP. Now, prior to this, Zulkifli was the head of business development in VCAP management in Sdn Berhad. He has held several senior roles within the financial services industry, including positions as CEO and CIO of Ispring Alwara Investment Berhad for a substantial number of years. He has more than 25 years of working experience covering the promotion of fixed income investments, ETF, and Islamic investment products. So Mr. Zul graduated from Syracuse University in New York, US, with a Bachelor of Science in Marketing Management. So welcome to our webinar, Mr. Zul.
Thank you, Shane.
All right, cool. Your audio webcam looks fine.
Okay.
And I like your background in
yeah, you can see the bull and bear behind me.
Yes, definitely. Very clear. All right. So I want to proceed to interview you and grill you on what are L&I ETF. Are you ready?
Okay, Shane.
All right, cool. Now, firstly, very introductory concept, like what are actually leverage and inverse ETF?
Okay, can I share my screen?
You may proceed to share your screen for better explanation.
Okay.
You can play some video also if you have.
Okay. Okay. So before I answer your question, say thank you for the generous introduction, and thank you, Bursa, for this opportunity to share my knowledge on ETF, and also thank you for the participants. I can see here about almost 500 participants who invested their weekend to get more knowledge on ETF and investment. So very good morning to all. Okay, overview on leverage and inverse ETF. By the name itself, if you look at the leverage, it means that you want extra, and from the normal index. So what I'm going to do here, I'm going to play Bursa Marketplace video. Maybe some of you are aware that in Bursa Marketplace, there are 6 tutorial videos on ETF. What I'm going to do is I'm going to play all the 6, but play one by one. I play one, and then I will explain. Then maybe some questions later on, and then I will play another video. Okay, now we go to the first video that explains about leverage and inverse ETF. These videos you can get at Bursa Marketplace. Okay.
Did you know that the first exchange-traded fund, or ETF, was launched in 1993? ETFs began as basic tools that provided exposure to broad indices. Since then, they have become one of the most popular investment vehicles for the investing public. Over the years, more sophisticated ETFs arrive on the scene. One of such are leveraged and inverse ETFs. What is the difference amongst conventional ETFs, leveraged ETFs, and inverse ETFs? Conventional ETFs seek to match the underlying index return. Leveraged ETFs, on the other hand, seek to amplify the return of an index on a daily basis. In contrast, inverse ETFs seek to deliver the opposite performance of the index on a daily basis. Let us look at 3 reasons to trade in leveraged and inverse ETFs. Let's assume you have a view on the KLCI index and decide to use the FBM KLCI ETF for your market exposure. Obtaining 1,000 shares will cost you around 1,780 ringgit. And the possibility of putting that full 1,780 ringgit at risk. On the other hand, an FBM KLCI 2 times leveraged ETF would give you the same FBM KLCI index exposure, but up to 200% daily leverage that would allow you to put up just half the amount of money or less to get similar exposure. So there's less capital at risk. Say you like the technology sector but want to avoid the risk of a single stock collapse. You could choose the basket approach of owning a technology sector ETF to spread the risk. Then, if you want to amplify your return on the bullish side, go with the technology 2 times leveraged ETF. If the collective performance of technology stocks tied to the index rises 1% on any given day, the leveraged ETF will go up 2%. What happens if the market takes a bearish turn? To capitalize on a falling market, you can buy an inverse ETF that tracks the opposite performance of the market, thereby allowing you to take profit when the market falls. In other words, if the market declines by 1% on any given day, the inverse ETF will go up 1%. There is no doubt that leveraged and inverse ETFs give traders many viable alternatives for multiplying gains and benefiting when markets decline. If you are wondering, are these funds right for you? Stay tuned for our next video to find out. This video is for educational purposes only and not intended as investment advice.
Okay, so everyone has seen the video, and from the video you understand that leverage ETF is a form of ETF that seeks to deliver multiplied returns of the underlying benchmark that they track. I'll give you an example of Kenanga ETF. We have 2 times KLCI leverage ETF that is listed on Bursa. Whenever, like the video said, whenever the KLCI index move by 1%, the leverage ETF will move by 1 times 2%. But at the same time, when the opposite happens, when the market goes down by 1%, the leverage ETF investors will be losing out 2%. On the other hand, inverse ETF is for those who believe that the market is at peak already and the market is going down. So, and the customer or the investors will make money when market is falling. If market goes down by 1%, like one Kenanga ETF, we have 1 time inverse ETF. Investors will make 1%. Whenever market goes down by 1%, investors will profit 1%. Index goes down in a day by 1%, inverse ETF should get 1%. But at the same time, if the index goes down by 1%, the leverage ETF, 2 times leverage ETF, will go down by 2%. And normally inverse ETF, they also call it a bear ETF. That's why you can see the background, the bear, and for the leverage ETF, bull ETF. So that's why whenever you have a bullish view, investors or traders will go and buy leverage. And if the market is at the top peakish already, you think that the market is peakish, then you will switch to inverse ETF. At the same time, there are also institutional clients who buy inverse ETF for their insurance. I can say for hedging purposes. Some of the unit trusts, maybe some of you are aware that you invested in unit trust, the growth strategy, the minimum that has to be maintained in equity is 70%. But if the fund manager believes that the market is going down, they still have to maintain 70% of the portfolio in equity. So how they can reduce the risk is by buying inverse ETF. So whenever the market falls, they will make money. And the ETF is calculated as a share that will include that 70% portfolio.
All right. So then we understand that how does what are L&I ETF, in short, leverage and inverse ETF, and what are their functions. So Mr. Zul, next question is, how do these L&I ETF work?
Okay, good question. I have a good solution. I have a Bursa Marketplace video tutorial that we can look at this, and then I can explain a bit later.
You've probably heard a lot recently about exchange-traded funds, or ETFs, which resemble unit trusts in structure, but can be traded throughout the day like shares. With the increasing popularity of ETFs, active investors are looking towards leveraged and inverse ETFs to help increase their exposure and stay agile in rapidly changing markets. Leveraged ETFs typically use financial derivatives to magnify the returns of an underlying index on a daily basis. Take, for example, a leveraged ETF with a 2-to-1 ratio. This would mean that every 1 ringgit invested creates a 2 ringgit position on the underlying index. Therefore, on a given day, if the index returns 1%, the leveraged ETF would return approximately 2%. Of course, if the index loses 1% on a given day, then the leveraged ETF will lose approximately 2%. Leveraged ETFs are very useful for investors to quickly gain position with an underlying index. Inverse ETFs use financial derivatives to profit from a decline in the value of an underlying index. In other words, they allow investors to take a position against the market by giving them an opportunity to match the opposite movement of an underlying index each day. If the underlying index falls by 1%, then the inverse ETF would rise in value by 1%. On the other hand, if the index rises by 1%, then the inverse ETF would fall by 1%. It is for this reason that inverse ETFs are advantageous in a bear market. Investors who have exposure to an underlying index or asset could use an inverse ETF to protect their investments instead of having to sell down. Leveraged and inverse ETFs can offer up to double the returns. However, the higher the potential returns, the greater the potential downsides. Ultimately, while leveraged and inverse ETFs offer new ways for investors to position themselves in the market, investors should learn more about them before jumping in. Stay tuned for our next video. This video is for educational purposes only and not intended as investment advice.
Okay, so you have seen the video, the tutorial, and what I'm going to show to now is our one ETF, Kenanga one ETF, that is 2 times leverage and 1 times inverse, the performance. This is, if you can see that the blue chart, the blue line is this KLCI, yeah, KLCI, and we launched on the 13th of January this year. What happened to the KLCI? 2 times leverage. But the market actually went down after we launched. The 2 times leverage went down, but 2 times. You can see, look here, 25% is almost 50% here for this leverage ETF. And for the inverse, it's almost 1 time. It's make money for those who invested in inverse ETF after we launch on, I think this is during PKP, MCO, yeah? So the package is at 30%. You will have made money 30% already if you have invested in inverse ETF by Kenanga, 1 time KLCI. But if you invested in the 2 times leverage, you have lost money almost 45%.
I see. Okay, so thank you, Mr. Zhu, for explaining. So now, but we understand that ETF is for passive investors, but L&I ETF, leverage and inverse ETF, who is it designed for?
Okay, this leverage and inverse or L&I, they are suitable for traders, not for buy and hold investors. So if you buy and hold, there will be an impact in terms of the compounding effect. So normally for leverage and inverse, it's for short term, very short term, 1 day daily traders, or maybe for medium term. Some of the videos that I have seen talking about leverage and inverse put maybe something like 2 weeks to 3 weeks of holding, the good holding for leverage and inverse. But in case you have a portfolio for you to hedge, then inverse may take a longer period, actually inverse. But if you really think that the market is going to be bullish for long term, then of course it is up to individual to take that risk and invest in long term. Okay, who can trade L&I ETF? Okay, we go to this Bursa tutorial video. Then I will explain in detail what are the criteria that is set by Bursa before one can trade L&I ETF.
Leveraged and inverse exchange-traded funds are short-term trading tools. They are not long-term investment instruments. If you are considering leveraged and inverse ETFs as part of your overall portfolio strategy, please bear in mind the following factors. Are you a conservative investor with a buy and hold approach to investing and cannot tolerate substantial losses in short periods of time? Or are you an active trader more willing to take on higher levels of risk? If you understand the risks associated with the use of leverage and are willing to take on these additional risks, leveraged and inverse ETFs can offer a multiple of the underlying index returns or losses on a daily basis. How actively do you monitor your investments? Given that leveraged and inverse ETFs are more suitable for short-term trading, you must have the time to actively monitor and act on the ETF's performance. These ETFs are not intended for investors who are unable to respond to changing market conditions on a short-term basis. Do you understand how compounding works? Understanding how compounding works is perhaps the key component in any leveraged and inverse ETF. Holding a leveraged and inverse ETF for more than a few days might lead to significant deviation in its performance from the underlying index due to the effects of compounding. As a result, leveraged and inverse ETFs are not meant for conservative investing and best used as short-term tactical trading tools. Investors are advised to refer to the qualification criteria available in the rules of Bursa Malaysia securities. Please seek the advice of a licensed investment professional before making an investment.
Okay. So from the video, it is not for conservative investors. It is for more like for risk takers that invest in this leverage and L&I ETF, and those who have time. On top of that, actually Bursa has come up with four criteria before investors or traders can invest in L&I. The first criteria is investors who fall under the category of sophisticated investors. So who actually qualify as sophisticated investors? Those who have assets more than 3 million, excluding primary residents, or someone who has a salary or personal income 300,000 a year. If you don't have 300,000 but joint income, personal and spouse of 400,000, both of you qualify as sophisticated investors, and you can trade this L&I. Number two criteria set by Bursa is investors who have margin accounts with their brokers. So for those who have your margin account with the brokers, you are allowed to trade in this L&I. The third criteria set by Bursa is investors who have made at least 5 transactions in exchange traded derivatives or structured warrants in the preceding 12 months. So if you have traded at least 5 transactions in traded derivatives and structured warrants, you are allowed to trade this L&I ETF. And the last, the simplest one is those investors who have utilized a performance simulator which simulates trading in L&I ETF and have undergone the video tutorials on L&I ETF on Bursa Marketplace. Remember, I said just now, we have 6 videos on L&I ETF on Bursa Marketplace. We will be playing all the 6 today, and we have played 3 and 3 later on. And once we go to the performance simulator, you can also do that, to do the performance simulator yourself. With this, you can get, I think Bursa will give you some certificate later on to allow you to trade in the L&I ETF.
Okay, so yeah, I understand that not every one of us here on the webinar are classified as sophisticated investors. Some of us may not have more than asset worth more than 3 million. Some of us don't have personal income more than 300,000. Okay, but don't worry, even if you don't fulfill this requirement, so long that you are watching 6 videos from L&I ETF on Bursa Marketplace, like what Mr. Su have played with you 3 videos just now, and you have done the performance simulator, then you are qualified to trade the L&I ETF. Or you just need to fulfill one of these 4 criteria. Not you don't have to fulfill all, but you have, so long that you have fulfilled one, you are qualified to trade L&I ETFs. So that's what I understand from Mr. Zhu sharing today. So next question I want to ask Mr. Zhu is that what are some of the ETF, L&I ETF issued by you, by Kenanga?
Okay. Thank you, Shane. This is my favorite questions. Okay, we have launched, like I said earlier, we have launched 2 ETFs, one leverage and one inverse, 2 times KLCI index and 1 time inverse. Okay, the stock code, these are the stock code for those who are familiar with the trading. And the stock short name is KLCI 2 times leverage, and the other one is KLCI 1 times I is inverse. Okay, we have launched this on 13th of January at the price of 2 ringgit. The initial approved fund size is 1 billion, meaning which that this is an open fund. We can increase whenever, let's say, after this tutorial, after this seminar, everyone has gung-ho and buy all this leverage. What if we use up all this 1 billion? You can always go to Bursa or to SC and request to increase this size. The initial issue price was 2 ringgit, and the current price is at 2 ringgit and 5 cents. On the inverse, the same issue price at 2 ringgit, and current price is 1 ringgit and 89 cents. Because the market is up a little bit compared to when we launched on the 13th of January. So you see the inverse price is coming down a little bit, but the leverage actually make money about 5 cents, because the index I think move around less than around 1 or 2% only. And the investors profile, who are suitable to buy one ETF by Kenanga. Okay, for the daily 2 times leverage ETF, from the name itself, leverage, this suitable for investors who have bullish view of the market. You must have a very bullish view of the market, and you are seeking 2 times leverage exposure to the companies of the KLCI index. And at the same time, like in the video tutorial, those who invest in this leverage and inverse ETF, L&I, you must have the time to actively monitor and manage your investment. And you must have a high risk tolerance. For those who intend to invest in inverse, you have a bearish view of the market. And you are seeking only for one ETF or Kenanga one ETF, you are seeking the opposite to mirror the performance of KLCI index, the opposite performance. So if you think the market going down, of course you will buy the inverse, and you will get whatever the percentage down by the index, the KLCI index, you get the outperformance there. And you must have the time to monitor actively and have high risk tolerance.
Yeah, so in short, L&I ETF is active fund, so you need to really actively monitor your investment, but not leave it there, because there's some compounding effect, which I believe Mr. Zhu will walk us through later. So if you feel that market is bullish, in short, you can have a magnified exposure through the 2 times leverage ETF. And if you feel that market is bearish and you want to make money, and then you can, instead of shorting the market, which is not allowed right now, like IDSS, RS is not allowed right now, you can actually trade the Kenanga KLCI daily inverse ETF, which will give you -1 times exposure. All right, excellent. So now, Mr. Zhu, can you walk us through like how do these L&I ETF perform in different market conditions, and also maybe walk us through some of the compounding effect?
Okay. How do L&I ETF perform in different market conditions? I will play 3 videos by the last 3 videos by Bursa, and by doing this, you will complete all the 6 videos. And in the videos, you can check, you can see that the performance of the ETF will be different compared to when we say two times leverage. Is it going to be 2 times at the end of your investment period? If you hold for, let's say, 1 month, the market moves, the index move, let's say 10%. If you buy 2 times leverage, you expect to make 20%. But is it going to be the same? You watch this video and you understand why the effect is not going to be the same for a long-term investment. I mean, for more than 1 day. More than 1 day, the performance will not be equivalent to the 2 times that is tagged to the leverage ETF. Okay, we play the video and later I'll explain more.
In previous videos, we discussed the effects of compounding on investors' returns. This next series of videos examines how daily rebalancing leads to deviations from the underlying index for investors who hold leveraged and inverse ETFs longer than a day. Stay with us as we examine how a leveraged ETF rebalances its holdings daily under 3 different multi-day scenarios: when markets rise steadily, when they decline steadily, and when they're flat but volatile. Keep in mind that for the entirety of this video, we will be using leveraged ETFs for the example. But these same principles also apply when inverse ETFs are used. Let us look at what happens when the market rises steadily over the course of 4 days. For explanatory purposes, the index value is set at 100 and the movements are set at 5% per day. Leveraged 2 times ETFs seek to maintain a daily exposure of up to 2 times the underlying index. Let's say you're an active investor and you believe that the market will go up. You may decide to use a 2 times leveraged ETF to give you up to 200% daily leverage for your market exposure. If you read the market correctly and on day 1, the index rises to 105 points, a 5% gain, your investment will gain 10%, that is, 2 times the index's exposure. This 2-to-1 exposure ratio is reset or rebalanced every day, so that the leveraged ETF can achieve its daily goal. However, this daily rebalance can also increase or decrease your exposure to the index if you hold your position for periods greater than 1 day. The changes in exposure level can mean that your returns can sometimes be different than 2 times the cumulative performance of the index over a longer period. Rebalancing can be an effective mechanism to help pursue returns closer to the fund multiple, which in this scenario is 2 times. Let us assume this upward trend continues for day 2, 3, and 4. By the time you close out your position on day 4, the index has now risen to 121.6 points, a 21.6% gain. So, while the index total gains for the 4 days is an impressive 21.6%, the 2 times leveraged ETF has returned more than 2 times. Daily rebalancing has increased your risk each day, and the subsequent upward index movements have caused positive compounding. Notice that this is more than double of 21.6%, which is the return of the index. This is due to a compounding effect as we hold the leveraged ETF for days. As a result, the leveraged ETF's accumulated gain is magnified and returns 46.4%. As a leveraged ETF investor, you need to recognize your increased exposure and risk, even if you believe the positive trend will continue. It is highly recommended that you constantly monitor your exposure level. In the next video, we will illustrate what happens when the market turns bearish instead. This video is for educational purposes only and not intended as investment advice.
Okay, we go to the next video.
In the previous video, we saw how when the market is on an uptrend, daily rebalancing could magnify and enhance returns for investors who hold their leveraged ETFs for more than a day. However, no investment is without risk. As with all investment products, there are risks involved when you invest in leveraged ETFs. If the market had taken a downward turn and remained bearish throughout the 4 days, you would have sustained losses on your investment. Let's see how that would happen. Again, let's assume you bought the 2 times leveraged ETF to give you up to 200% daily leverage for your market exposure. Unfortunately, your view of the market was wrong, and instead of going up, the index declines 5% from 100 to 95 points. The leveraged ETF returns 2 times of that loss and declines by 10%. In real life, you would exercise prudence and may consider cutting your losses. But for explanatory purposes, we will continue with this hypothetical scenario. So for the next 4 consecutive days, the index continues its 5% decline. The total decline is minus 18.5% for the 4 days. Even though your investment also declines significantly at minus 34.4%, it is not as much as 2 times the cumulative return of the index. Daily rebalancing has reduced the exposure each day. As part of the rebalancing process, the assets of the leveraged ETF are reduced to ensure that its market exposure level is consistently 2 times the exposure to the index. The result of this process is that you end up losing less than you would have if the leveraged ETF had not been rebalanced each day. Even though daily rebalancing mitigated your exposure, you must always be aware of your increased exposure and risk when you hold your leveraged ETFs for longer than a day. Constantly monitor your exposure level. In the next video, we will show you what will happen to your investment when the market is flat but volatile. This video is for educational purposes only and not intended as investment advice.
So for this bearish, 5 days bearish movement, you see that the losses is not 2 times, but when it was a bearish, it was bullish, you see the performance was more than 2 times. But what happened to when the markets are flat but volatile? Okay, we play the video.
In the previous video, we saw how daily rebalancing decreases index exposure when the market declines steadily for periods longer than a day. Finally, let us examine what happens when the market is flat but volatile over the course of 4 days. Assuming on day 1 you decide to buy the 2 times leveraged ETF to give you up to 200% of market exposure. The index rises 5% to 105 points, so your investment value increases to 110 points, 2 times the index's exposure, or 10%. You then decide to hold your position into day 2. Unfortunately, on day 2, the index erases its gains and drops back to 100 points for a 4.76% decline. The value of leveraged ETF sees a greater than 2 times drop from 110 to 99.5 points for a 9.52% decline. On day 3, the index swings back up to 105 points, gaining 5%, and the value of leveraged ETF sees a corresponding rise from 99.5 to 109.5 points. Again, the uptrend doesn't hold, and on day 4, the index declines 4.76% to settle back at 100 points. While the index ended flat, starting at 100 and ending at 100, the value of your 2 times leveraged ETF fell to 99 points and ended up losing 1% due to negative effects on compounding. Even though the index ended 4 volatile days with no change, you still ended up losing money on your investment. To sum it up, leveraged ETFs perform differently in different market scenarios. The key takeaways are: 1. The positive and negative effects of compounding are magnified in leveraged ETFs, where upward trending periods may enhance returns. Downward trending periods may reduce losses. And in volatile periods, Compounding may reduce returns and increase losses. Similar deviations will appear for inverse ETF. Upward trending periods may reduce losses. Downward trending periods may enhance returns. And in volatile periods, compounding may reduce returns and increase losses. 2. Daily rebalancing leads to increased or decreased exposure levels for investors who hold leveraged ETFs longer than a day. For investors who are interested to trade leveraged and inverse ETFs, do take the time to understand about the features and characteristics of the product before you start to invest. This video is for educational purposes only and not intended as investment advice.
Okay, we have played all the 6 videos, and from very clear explanation from the videos tutorial. And if you understand that, that is the compounding effect. So be very careful when you start trading in this L&I. If you don't want to have the compounding effect, then you have to be a daily traders. You buy in the morning and sell in the afternoon, or just holding it for 1 day, 1 or 2 days. But if you really bullish about the market, of course, it will enhance your performance if you are correct and you buy the 2 times leverage KLCI. And instead of assuming that the index move by 10%, you move more than 10% actually, 10% times 2.
Okay, so yes, so that is the idea of L&I ETF and its compounding effect. And personally, I have actually invested in, traded L&I ETF many years ago. I also I've held a leverage ETF for more than 1.5 years, and also lose quite a bit due to the compounding effect. So personally, I can feel the compounding effect very well, because many years ago, when I was still not so educated about and I made this kind of mistake. So now right now Mr. Zhu has already played all the 6 videos, which is part of the requirement for retail investors to trade the L&I ETF. So you have watched the 6 tutorial videos developed by Bursa, and then next thing is you just need to do a performance simulator. Then you'll be able to, you're eligible to trade the L&I ETF. So Mr. Zhu, could you walk us through like how to use your performance simulator and show us some examples?
Okay, thank you, Shane. Okay, we go to, this is the website for our ETF, one ETF. Kenanga ETF is named by one ETF. So you can click, okay, you can go to this one ETF, and this is the daily 2 times leverage ETF. Okay, and okay, this is the Kenanga KLCI daily 2 times leverage ETF. Let's go to the, when we first launched this ETF on the 13th of January and look at the performance. Okay, the index actually flat. This the blue one. It is flat. You can see it's very flat. Of course, there's a lot of movement here. MCO, the PKP is here, and end up, as at yesterday, it was up by 0.5 points only. But what happened to the ETF 2 times leverage? It is up by, you can see the form, sorry, trying to get the, okay, it's about 5.4%. So this is actually, okay, KLCI moved by 1.6%, the 2 times leverage by 5.4%. So you can see that. And what happened if, let's say, we assume we buy this leverage, 2 times leverage at the start of PKP, MCO, movement control order, that will be on the 18th, right? 18, and until yesterday, we look at what is the performance like. Okay, because the index actually, the KLCI index was moving upward, trending upward, and we see what happened to the KLCI 2 times leverage. This is the index. Trying to get the okay. As at 23rd of July, KLCI moved 31% from 18th of March. So we'll see what happened to the ETF, the rate. So 31%, if you times 2 is 62. But look at the performance of the ETF. This is due to the compounding effect. 79, close to 80%, 79%. So you see that this is what happened if you don't actually rebalance or trade it on a daily basis. You get this compounding effect, which is good. For a market that is trending upward and you buy leverage, you look at the performance here, it is more than double. The index only moved up by 31%, but the ETF moves up by almost 80%. So due to this compounding effect. Okay, and we go to the next one, to the inverse. We look at inverse. Okay, this is for the inverse. Okay, this is the inverse. Okay, we look at the same period, starting of PKP. It's on 18 March. Okay. Search. Okay. So the index goes up, and ETF actually, the inverse, of course, because the market goes up, and you are betting that you are wrong on your view, and this is the performance of the inverse ETF. 31%, and we look what happened to the inverse. 27% only. So it's less compared to the index itself. So when the market is trending for the inverse, when market is trending up, you were losing lesser compared to the index. That's why you need to do this performance simulator, and you will understand the effect of compounding to your investment, and make sure that you can be actively involved in looking and taking care of your investment in L&I. Not just buy and keep it there and wait until 1.5 years later, Yashin, and look at what happened. Thank you.
Yeah, so that was when I was still naive when I was trading the US L&I ETF. Okay, so I learned my mistake. So now, in short, I think the big idea that we got from Mr. Zhu's session from Leverage and Inverse ETF is that Leverage and Inverse ETF give you the return on a daily basis, but not on an extended duration basis, because the L&I ETF rebalance every day to give it exact negative 1 times or 2 times return on a daily basis, but not over an extended period, because the compounding effect will move differently, will work differently for the investor. And for the extreme trending bull market, then you can look at the leverage ETF that can give us like good return. And for the extreme trending bear market, then we can look into the inverse ETF, whereby during a volatile market, then we need to better do intraday trading instead of holding it over a period of time. So that's some idea that I got from the Bursa video, as well as the session with Mr. Zhu today. So now we have coming to a Q&A session. So my questions for Mr. Zhu is done. So now it's your job, okay, So if you have any question that you want to ask our guest speaker today, Mr. Zul, who is the CEO of Kenanga Islamic Investors Berhad, please write in the Q&A box, key in your question in full sentences so that we'll be able to understand your questions. So if you're streaming in from YouTube, please type your questions in the YouTube comment. We'll pick up some questions from YouTube to ask our speaker, Mr. Zul, today.
Okay, I can see this question coming from Nurizati Ismail. Thank you. How can actually the inverse works when the KLCI go down? Can you please explain what happened behind it? Okay. What happened is our fund manager, Kenanga fund manager, we will buy or short the market by shorting the futures. And maybe when you do futures, derivatives is not Sharia yet. It's not Sharia. So this leverage and inverse currently is not a Sharia investment. Even though I come from Islamic investment, but what I'm doing now is I'm trying to explain the leverage and inverse. So how the inverse make money because of the fund manager, Kenanga fund manager will buy or shorting the futures index. So we will do that behind the scene, and what happened is what you will get is just the the performance whenever index going down. Our fund manager that buy or short the futures will make money. Okay. What is the risk between bond and, or what is the risk between bond and ETF? Quite interesting. Okay, bond, you have an issuer risk because when you buy a bond, because this is something totally different. When you buy bond, you buy the issuer. Example is you buy Maybank bond. But when you buy ETF, you buy a lot of issuers inside there. It can be ETF bond. It can be also equity ETF. But when you buy a bond, you just buy one particular issuer. But when you buy ETF bond, you buy a various issuer inside there. So that's you are hedging your risk actually. How to determine the NAV of the Kenanga leverage ETF? Okay, this is actually shared by Lichu just now. Every day, I think in the case of Kenanga leverage ETF, it will be updated every 15 seconds on the Bursa website, on the prices. Bursa website will update every 15 seconds the NAV of the Kenanga leverage ETF and inverse ETF every 15 seconds. The price of IOPV, that is the NAV, will be updated on Bursa every 15 seconds.
Sorry, Encik Zul, it's actually every 1 minute.
Every 1 minute? Okay, sorry.
Yeah.
Every 1 minute. Okay. Sorry, guys, every 1 minute, because we try to do it every 15 seconds actually over here, but maybe now it's every 1 minute, but it's still good. So you get the information updated on the NAV every 1 minute. Okay, question from Nur Alizah Mama Ali. Can we buy inverse fund immediately once we see the trend bearish? And can we convert leverage to inverse fund? Of course, this is something like you buy a normal share. Whenever that you see that you want to take profit or you want to cut loss, you have the ability to do that immediately. What from Yu Long Liu, what is the difference between future and ETF? Okay, I'm assuming this ETF leverage and inverse. It is almost similar, but what you don't have to do when you buy ETF L&I is you don't have to actually look at your margin. When you do futures, you are buying on margin, and you have to top or top your margin whenever the broker call for you to top your margin. But for ETF L&I, you don't have to do that. You buy and sell based on the price on Bursa. Okay, another question by Aiman. What is the recommended initial investment in ETF? Okay, as you are aware that what Li Chu has explained just now, ETF is traded on Bursa, and currently minimum size is 100 unit. 100 unit, and depending on the ETF that you will buy, for one ETF by Kenanga, it's about RM2 now, RM2.05. So you will spend about RM205 lah. That's minus the brokerage. So recommended initial investment depending on your ability. Tengok your own pocket and how much you can a loss. I can say that lah. Of course, maybe for a starter you can have minimum of 100 unit, but later on, once you are more comfortable, you can add more of this investment. Okay, from Lee Kian Kok, the ETF is so illiquid, how to buy and sell? Okay, this is a catch-22 situation actually. I think Bursa is trying its very best to make ETF very liquid. That's why we want to get more of retail investors to join and buy and sell this ETF. But at the same time, Li Chu just now explained that for any ETF, before we can launch, an issuer can launch, there will be a market maker and PD. So the role of market maker is to 80% of the time, they have to make market. They have to put their bid and offer. Their bid and offer may be not at the NAV, maybe 1 cent or 2 cents lower or above the NAV, but it is how the market maker makes money. They play on the spread, maybe 1 cent, maybe half a cent. So if you talking about illiquid, actually 80% of the time, there will be always a seller or buyer. Talking about leverage, okay, from Chen. Talking about leverage ETF, what is the minimum capital do we need to stand by? Okay, the good thing about stock or the leverage ETF, whatever that you invested, let's say you invested in 1,000 unit for this one ETF by Kenanga, you will spend about 2,000 ringgit. You put your money 2,000 ringgit, that is the money that will be there, and you will not lose more than 2,000. But if you do futures, if you put 2,000 on futures, you may be losing more than 2,000 because if there is another margin call. But for ETF, you will just put your whatever amount that you are comfortable, whether 200 or 2,000, and this is the capital that you are risking. Of course, it's highly unlikely that cash will go to zero. So quite highly unlikely that you will lose your everything lah, or lost half of 50% of the KLCI. Okay, from Desmond Gan, Mr. Morning. So morning to Desmond. So is it that leverage ETF and inverse ETF better do day trading? Yes. So this is, if you want the performance to be exact, like the 2 times ETF or 1 time inverse, then it is a daily. So daily you have to go in and out. So then you will get the actual. If you can catch the morning price, the closing price of yesterday, and you can sell at the closing price of the following day, you can get the performance of the exact 2 times of the leverage. But of course, like I showed earlier in the performance simulator, you see that for those who actually bought during the start of the PKP, when the market on the 18th of March bought one ETF Kenanga, index moved only 30%. But had you bought it on the 18th of March, your performance would be 80%, 79%. So this is more than double the KLCI index, what we have learned just now, because due to the compounding effect. Okay. KLCI one-time inverse issued at RM2 at 13 January 2020 when KLCI is 1596 points. On what basis do you value it at 2? Oh. I think this is where when we start, we just put the where we have the futures and the starting point of our issuance. This is where our issuance start, 1596. Okay. Any question from YouTube?
Oh yes. So Mr. Zhu, the one question is, well, I think you just answered that question also. So
Okay.
Is there any expiry to the leverage and inverse ETF?
Okay, there is no expiry, because whatever, when you do futures, there's expiry. But when you do leverage and inverse ETF, all this margin, the expiry, the rollover will be taken care by fund manager, by Kenanga. So investors or traders don't have to worry about a rollover or the margin call.
Okay, there's one question from Sanjeev who asked that is the income from ETF taxable?
Oh, taxable or not? I not sure on that, but I don't think so. I don't think so. I can answer it now, but my understanding there are a lot of incentive given to ETF. Maybe Bursa can highlight on this. Anyone from Bursa? Because I think a lot of incentive been given to ETF investors. So maybe
there is no stamp duty.
Yeah,
charges.
so a lot of incentive for the ETF investors.
Yeah, so if you trade the ETF right now, there's no incentive, there's incentive and there's no stamp duty lah. So the thing is no stamp duty, and we are going to announce a ETF rebate program and cashback program with you later. So this is one of the good initiative launched by Bursa. So make sure you stay tuned until the end so you know what are the incentives that you can get when you invest or trade ETF in a short while. All right, please stay tuned until the end of the sessions. So is there any other questions for Mr. Zhu? Okay, let me do one round check at YouTube. All right, so I think it is about 12 p.m. So we are getting ready to go into our quiz. Okay, I want to thank Mr. Zhu from Kenanga Investors Berhad to share with us about leverage and inverse ETF issued by Kenanga. So, and also I'm sure that now all of you here have a better understanding about what are L&I ETF, how do they work, who can trade it, what are the eligibility criteria before you can trade L&I ETF, and then how do you see the simulator and the compounding effect? You know, it does not track over an extended period of time, but it gives the tracking on a daily basis. So this is the idea from the L&I session by Kenanga just a moment ago. So are you guys ready for some quiz? Okay, so allow me to share my screen. Okay, so we want to thank both speakers for giving us an excellent presentation in the morning on inverse on the ETF by Affin Hwang, as well as leverage and inverse ETF by Kenanga. So thank you for the wonderful session. So now we are ready for the quiz. Now, thank you for staying tuned until almost the last section of this Bursa webinar, the easy way to trade and invest in stock market. So now, who else is ready for quiz? And for some prizes, please type me. Okay, please type me in the chat box and let me see if you are ready. Okay, if you're ready to get, you know, a 5-star hotel stay in Langkawi. Wow. Oh, so that is the sole reason you all are staying until the last part of this section. So, all right, so this time the gift was sponsored by Bursa Malaysia. We want to thank Bursa Malaysia for organizing it as well as sponsoring some gift so that all of us here can tune in and watch the Bursa webinar and also at the same time can also chill in Langkawi. Okay, so now I'm going to give you step-by-step instruction on how you can participate in the quiz. All right, so as you know, the first place will get a 3-day 2-night stay in a 5-star hotel in Langkawi. And then the second place will get a Deutsche Gusto coffee machine. And then the third place will get a 2-pack dinner set meal in an atmosphere 360 degree in Menara, Kuala Lumpur. However, of course, due to the seat availability, we might actually replace it with other equivalent value set meal in the event that Menara KL restaurant is not available on the date that you want. All right, so let's go to the quiz instruction. Now, the first step is I want everybody here to visit www.kahoot.in. All right. And before that, I just want to highlight it for the benefit of people who are streaming in from YouTube. This quiz is only open for webinar registrants. So if you had not registered for this webinar, if you're streaming in from YouTube and you have not registered for this webinar, kindly go to https or www.tinyurl.com/Bursa ETF webinar to register so that we can keep track of your ID identity, and then if you're a winner, we can give you a prize. So if you do not register with us, so when you win, we cannot give you the prize. So please head over to www.tinyurl.com/Bursa ETF webinar to register yourself for this webinar. I've just posted the link on the YouTube comment. So now the first step to do this quiz is to visit www.kahoot.in. So if you are free right now, please open another new browser and go to www.kahoot.in. So the game will be hosted on Kahoot. Then the second step is to key in the game pin shown on the screen. Okay, I will give you the game pin shortly, but the first step is you have to visit the www.kahoot.it. The third step is after I give you the game pin, you have to key in your full name as per webinar registrations. So in short, in a short while, there will be 16 quiz questions shown on your screen, on your desktop screen. You will pick the correct answer on your browser. Okay. How are we going to determine the winners? The ones with the most number of accurate answers within the time limit and the fastest response will win. So there will be more marks given to you if you responded faster. Now everybody only got one time click. So if you click one time, right? Then if you're very fast but you click the wrong answer, then no marks. Okay. So you need to be fast and accurate. Okay. So don't be fast but not accurate. You need to be fast and accurate. And if you have a most number of win streak, then you have a lot of bonus points. So that's how we can determine the winner, to check whether you have been paying attention in our this webinar or not. So here are some rules and regulations for this game. Number one, you must put your full name as per webinar registration, so we'll be able to track you. So you just don't put haha, ho ho, okay, this time we cannot track you, okay? So each participant is allowed to submit one entry for the quiz only. Okay, you can only participate one time with your real name. The quiz cutoff time is 12:20. Okay, we have 15 minutes right now. It's 12:05. I will cut off the quiz at 12:20. So everybody, you have to answer the quiz from now to 12:20 after I give you the pin. So it's just 16 questions, very easy. So the first 2 questions are dummy question and contribute no mark. Okay, so there will be 16 out of 16 questions, only the last 14 questions got mark. The first 2 questions are dummy questions, so it carry no mark, just so that you're familiar with the platform. Okay, So the first 2 questions is for you to familiarize yourself with the quiz platform so that you'll be able to participate fully in the subsequent questions that carry marks. And lastly, is the organizer reserve the absolute right in determining the winners or disqualifying any winners for any unfair practices if you manage to find out. Okay, so now, are you guys ready? Are you guys ready? If yes, please type ready. I will give you the game pin shortly. You're all at the www.kahoot.it, right? All right, cool. Let's go. I see that. All right. So you have to answer the quiz from now until 12:20. You have time. So after you're done with the quiz, you can go to the loo and come back at 12:20 for us to announce the winners. So here is the game pin. Okay, 01568778. Okay, please key in the game pin, and then the quiz will end 12:20. Please key in the game pin right now and answer your quiz on your browser. If you're done with the quiz, then you can take a short break and come back at 12:20 where we will announce who are the winners and tell you more about the ETF rebate program, as well as some lucky draw contest details after that. So please hurry up, key in 01568778. This is the game pin. So you got to open a new browser, www.kahoot.it. Go to the type www.kahoot.it. It could be on Google Chrome or Mozilla Firefox, or it can be on the Safari, Internet Explorer. Okay. And then after you go to this website, 01568778. Okay. How do we open a new browser? You just go to click your browser, which is Internet Explorer or Google Chrome or Mozilla Firefox. Yeah, so that's how you can open a new browser and enter the address www.kahoot.it. Then you'll be able to answer the quiz. If you're on your mobile phone, you can also go to your Google Chrome. Okay, the questions will pop up on your screen. Everyone doing okay? Let me see. Okay, there are already 250 players in our quiz. Okay, so most of you are doing okay. So which questions are you on right now? There's 10 more minutes for you to answer the quiz. And if you are done, you can go to the washroom or take a break. The session will resume at 12:20 for the announcement of the winners. Make sure you see the answer correctly. Don't accidentally click wrong. You only have one attempt, okay? You need to be fast and accurate. Yeah, the game session is hosted at the browser, okay? You go to the browser to answer. In the meantime, I will do my best to entertain you lah. So what you want to talk about? Talk about market, talk about glove, talk about pharmaceutical, or talk about ETF, okay? Today is about ETF lah. Now, in the meantime, if any question to ask the ETF, you can put it in the question. Okay, I will try to, if our speaker is still around, we can ask them to answer some questions. So to keep everybody entertained here. Wow, Mr. Chong finished already. All correct. Okay, we'll see who is the. I'm sure along the way you will see the leading scorer. I will end the quiz at 12:20. Okay, so MY said that it is not. MY asked a question just now. The first speaker said the portfolio of stock for ETF not disclosed. How would we know what stock we are buying? Actually, this is not true. I think the first Li Zhu was talking about the holdings of the mutual funds are not disclosed on a regular basis, but the holdings of the ETF are disclosed and made transparent on the exchange. Okay, unlike mutual fund, you will only see the holdings maybe every quarter or half yearly when they give you their reports. But on the ETF side, the holding will be made transparent and it is updated every day. Okay, if there's any buy or sell. But essentially, ETF are just passive funds, so there will be very little trading. There'll be very little trading. So the fund constituents should be pretty much similar unless KLCI or the index compositions got changed. So there will be just minor adjustment. All right, hope I answered the question from Mr. MY. Miss MY. Thank you, Kumar, for your kind review. Li Zhu, you want to say something?
Yeah, I hope after this session, all of you are more aware of the ETF market in Malaysia. And, do give the ETF market a chance instead of, saying that, the fees are high, no liquidity, no volume and things like that. I think just give it a try. So we're not saying that, you should put all your investable assets into ETFs. But do try it out and experience the trading of it. And if you really can't get out of the market, I always like to joke and say that you just need to call me lah. I'll buy back the units from you at a fair value. So I think at the end of the day, if we want to develop ourselves and grow our market to be as developed as the US market and Hong Kong market, etc., we have to support our own Malaysian market. If everybody just goes out to the US market to invest, then we can't grow the volume. We can't grow the ETF market in Malaysia. So yeah, that's my closing remarks.
Yeah, there are still some questions on Q&A. Any speaker want to take that?
Okay, take a look. So I think maybe some of you, I think earlier on I did see a question asking that why you can't trade ETF online. So if I'm not wrong, there are a few ETFs that requires additional requirement for you to trade, right? First of all, the gold ETF, because it's Sharia compliant. So for the gold ETF, some brokers do not allow online trading straight through because they need to check if it's a cash upfront account and if you have cash in your account. So that is also one of the reasons why they block it from online trading. So I guess for those type of products, you need to give them a call, or there are other brokers who can facilitate that the trading of the gold ETF easier. That's one of the questions that we get a lot. The other one is the leverage and inverse, because the brokers need you to sign an additional declaration form, as well as to watch the videos that Bursa has developed, which all of you have already watched it just now, the 6 videos, as well as go through the performance simulator before you can invest into the L&I ETFs. So I guess that's why you need to, sign an additional declaration. Once you sign it, then you are good to go. You can trade it at any time you like.
Okay.
Some ask whether can hold both leverage and inverse at the same time. Actually, why do you want to hold both leverage and inverse at the same time? Because if you hold both, you kind of net off the return, it doesn't really make much sense, and then you might get whacked because of the compounding effect as well. So the suggestion is, if you want to trade L&I, you better be clear as to what where the direction of the index is going to be. So if you think that the index is going up, then you can ditch the inverse and just hold on to your leverage ETF, and vice versa. If you think that the market is turning bearish, then you should dump your leverage and buy the inverse. So no point to hold both.
Two more minutes before we close the quiz. Okay, if you haven't done so, hurry up to participate in the quiz. Thank you, Dato Zuraida, for your kind remarks. This is very encouraging to us. So this question is technical analysis a must know for trading ETF. I think you just need to, not necessarily, but because the ETF will move according to constituent, an index that they track, and then of course if you do the technical analysis on the index but not on the ETF lah.
The L&I disclosure, where do we go and sign? So basically this one is with your broker. So let's say if you have a current trading account with Maybank, then you need to call Maybank to sign the additional L&I disclosure. Of course, if you have an account with Affin, Hwang, Kenanga, or even Rakuten, you need to contact your broker, your respective broker, to sign the additional disclosure.
Lichu, there's a question by Leo Kok Kyong. Would you want to take that?
Since the behind the ETF is regulated by market maker, is there a reference for the ETF price? Okay, so I know for those of you who have been trading warrants, some of you like the live matrix from the issuers, but in the case of ETF, you can refer to the IOPV. So just now earlier in my screen or in my slides, I did show where in Bursa Marketplace website that you can find the IOPV. So IOPV is actually more or less equivalent to like the live matrix, but of course we don't show you like for example, if the index point is at 1005, then what is the corresponding NAV? But the IOPV shows you the current fair value of the particular ETF.
Okay, so time's up. So I will just end the quiz and announce the winner. Are you guys ready? I guess along the way you have also seen the leaders board. So in total we have 339 players who participate in our quiz this afternoon. So let me just see who is the winner. The first place is Muhammad Naim. Congratulations, you're going to get a 3-day 2-night stay in a 5-star hotel in Langkawi, followed by second place Ke Chi Li, okay, who is going to get a Deutsche Gusto coffee machine. The third place is Chai Yung Sai, who is going to get a 2-pack set meal at a good restaurant. Okay, so here are our 3 winners for our quiz this morning on ETF and leverage and inverse ETF. But for those of you who did not manage to win in this quiz, because you see there are 325 people participate and only 3 persons that we can pick to give the prizes. But don't worry, we still have more prizes for you in a short while. So in the meantime, my team will reach out to you to get your details for the quiz participation. Okay, for the winners, our team will reach out to you shortly to get your details so we can contact you for the prizes. Now, so the quiz is over right now. So congratulations to the winners, and for those of you who participated, hope that it give you a interesting morning to learn about ETF and also challenging you to answer the quizzes. So right now we also have a lucky draw. Okay, but the lucky draw do not take place today. It will take place in August. We announce the winner is August. So what is this lucky draw about? So what you need to do is you just need to answer 2 questions correctly using Kenanga L&I ETF simulator by 30th of July. Now, upon exiting this webinar, or upon you receiving emails from us, from the follow-up email from us, then you will receive a link in your email. So there are 2 ways you can get the link. One is after you exit this webinar, then you answer the questions. Then secondly is you will also get the link via email. So when you get the link via email or after you exit this webinar, please answer the 2 quiz on a Google Doc. Then if you answer both 2 questions correctly using Kenanga L&I ETF simulator, you will be in the running to win about Touch and Go e-wallet top-up of 50 ringgit. Okay, there'll be 10 lucky winners that we will pick from those people who answer both questions correctly. Okay, the first few questions is on your details. Then there are 2 questions on the Kenanga L&I ETF simulator. You answer both correctly, then you'll be in the running to get a 50 ringgit top-up in your Touch and Go e-wallet. So your question is, if I don't have Touch and Go, how leh? Then you go and download the Touch and Go e-wallet lah. Then we will credit 50 ringgit to you for 10 lucky winners. So you must answer this quiz by 30th of July 2020, whereby we will announce the 10 lucky winners on in the month of August. Secondly, you also get the e-certificate. If you answer at least 1 correct, then you will get an e-certificate issued by Bursa Malaysia, so that you can, there's a name to show that you have completed this webinar, and certificate to acknowledge that you participated in the simulator as well. So do the quiz. If you get 2 correct, then you can you'll be in the running to win the 50 ringgit top up on your Touch and Go e-wallet. If you get at least 1 correct, then you'll be awarded with an e-certificate. Okay, there's nothing for you to lose. So just take your time, just a few minutes to answer the quiz, which will be sent to you via email or upon you exiting this webinar. The link will be provided to you. Just do check out from our email. Now, last but not least, we want to announce to you the ETF cashback program. So this is a special incentive announced by not announced, but you are one of the first few person to know. So the ETF cashback program will be launched from 3rd of August to 2nd November 2020. So you'll get 150 ringgit cashback when you invest into ETF. So if you invest in one or multiple Bursa listed ETF with cumulative value of 3,000 and above to receive 1 unit of 150 ringgit touch and go e-wallet cash voucher. So just imagine if you invest like 3,000 only, invest 3,000, you get 150 ringgit touch and go e-wallet. That's how many percent? That's 5,000%, 5% return to you immediately. But of course, you can, so long that you put more than 3,000, you can put 4,000, 5,000, 10,000, okay, up to you. But so long that your cumulative value is more than 3,000, you will be able to get 150 ringgit cashback in your touch and go e-wallet as well. But this is only limited to the first 500 eligible investors. So after 500, then we run out. So we only have a budget of 500. So all sponsored by Bursa Malaysia. So eligible investor will receive the touch and go e-wallet cash voucher from their respective brokers at the end of ETF cashback program period. So you don't go to Bursa. So for the cash voucher, your broker will tell you whether you are eligible or not to get the PIN. So the Bursa will work together closely with the brokers to give the eligible first 500 eligible investor the 150 ringgit touch and go e-wallet PIN, and then your broker will give it to you if you are eligible investor from during this campaign period. Okay, isn't that a really cool cashback? Invest at least 3,000 ringgit, then you get 150 ringgit touch and go top up, which is pretty cool. Okay, if you do 3,000, there's a 5% return to you immediately. So this campaign is not officially launched yet, so you are one of the first few person who received the first scoop of information for this ETF cashback program. So stay tuned to Bursa Marketplace website for the full announcement on the terms and conditions. Okay, today we just break the news to you earlier so that you get excited and look into ETF as part of your investing strategy and also part of your portfolio. Now, Bursa also spent a lot of resources to build this academy called Bursa Academy, recently launched. So it's a comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. It is simplified, it's user-friendly and accessible anywhere, anytime, at your own place. You can go to Bursa Academy to register for our upcoming webinar. You can also find some of the LifeChamp webinars on Bursa Academy brought to you by Bursa Malaysia. So go to Bursa Academy and find some of our programs. Of course, there are also past program recordings, webinars, notes, article, PDF, even quiz for you to participate in Bursa Academy that will challenge us in terms of our knowledge on the capital market. You can also learn strategies, trading strategy, investing strategy from licensed investors, licensed capital market professionals on Bursa Academy. So go to Bursa Academy to check out this fantastic one-stop e-learning platform for you, so you can be a wise and informed investors all the time, from product knowledge, from Islamic capital market to derivative market to equity market, from structured warrants to ETF. The information is there, the knowledge is there, the teachers are there to teach you and share with you their ideas and strategies. So go to sign an account with Bursa Academy and also Bursa Marketplace as well. Now, I want to thank all of you for tuning in until the end of our webinar, and want to congratulate all quiz winners for winning a 3-day 2-night stay at a 5-star hotel, for the coffee machine and a 2-pack set meal at a fantastic restaurant. And congratulations for everyone. Quiz lucky draw question will be sent to you via email and also upon exiting this webinar. And thank all of you for your wonderful participation in this sunny morning. Now it's afternoon, so we will see you all in our next Bursa webinar. Thank you for both speakers, and bye-bye everybody. This is Shane signing off.